Hi, I'm here today to talk about business credit. My name is Leah Voigt, and I work for Metropolitan Family Service, where I do credit coaching with business owners. Today's presentation is sponsored by Prosper Portland and the Inclusive Business Resource Network, and the material that I'm presenting is from Credit Builders Alliance. Metropolitan Family Service is a nonprofit with over 70 years of experience as part of the Portland community. MFS helps people move beyond the limitations of poverty, inequity, and social isolation. So, getting started, credit can be a really difficult conversation to have. Anything to do with money can be a really difficult conversation to have. So, even if you're a bit shy, just getting started, not quite comfortable with the topic, this is the perfect place to be, and the perfect place to learn more to get that started. As I said, this training is licensed with permission from Credit Builders Alliance. Their mission is bridging the gap between equity-focused nonprofits and credit bureaus to work to unlock credit as an asset for all. The content in this training should not be construed as and does not constitute legal advice on any specific matter. This information is also provided without any representation that it's complete. Today's trainings will cover different business credit topics, but it's not an endorsement of any specific product or even any specific credit builder strategy. You should carefully consider any product before entering into an agreement and know the details of your case before deciding what works best for you for credit building. Okay, so let's begin by talking about some important basics in business credit and why does it matter. In today's video, the goals are to understand what is business credit, to learn the connection and the differences between business credit and personal credit, and to discuss the importance of business credit. When we talk about business credit, we're really referring to two things: your business's experience using and managing credit accounts and products, and the types of credit products themselves, like credit cards and loans that your business takes out. What makes them business credit is that your products are in your business's name rather than in your personal name. So if we think about your business's needs over time, in the beginning, your personal credit score may be more important than your business's credit. Spending time working on your personal credit will enable you and your business to have more options for products, likely with better interest rates and terms. As your business grows, its credit as an entity by itself will likely become more important. That said, even larger business loans for established businesses may still consider the owner's personal credit history as part of the business's credit application. So, no matter what, focusing on your business credit in addition to your own credit allows you to increase your financing options and opportunities down the road. Sometimes you might ask, why not just rely on personal credit to grow and develop my business, right? You said that lenders are going to be looking at my personal credit anyway, especially in the start, or depending on the size of my business. So why not just do that? And it helps on a number of different ways. One is your business should be paying expenses out of its own operating funds rather than your personal account. Building business credit lets you separate those personal and business funds, or rather aids you in that process in a way, because your business is then going to have its own account. It won't have to be pulling from your personal credit cards. If your finances are merged, right, again, we said that this can help separate them. If they're still merged, then sometimes the struggling business can impact your personal finances, or other way around, struggling personal finances can impact your business. And those can then result in having more challenges accessing business credit. One way that this happens, or one way that it shows up, is that likely the amounts that you're taking out in business loans or putting on a business credit card are much larger dollar amounts than are happening on your personal loans or credit cards. And so when your credit history is being evaluated, that means that these total amounts, these total balances, if everything is on your personal card, is going to show that you're borrowing a lot of money at once, when in reality, it might be that you are borrowing some money personally, but that the money that there's also money that's being taken out that's actually your business's debt. And so by separating them out, it can help reflect more accurately, the personal money that you're borrowing and repaying versus the money that your business itself is borrowing and repaying. Even when we have them in separate accounts, even if there is separate business, there still is a connection and an overlap. Um, but keeping them separate, as I said, does allow for a little more independence as they function. That one struggling doesn't automatically mean that they're struggling in the other. At the beginning of the video, I talked about how business credit is defined as credit products, right? Borrowing and repaying in the name of your business. So while this is true, some lenders may still ask you to sign a personal guarantee on money that you are borrowing, your business is borrowing in its own name. And what that means is that if the business can't repay that money for any reason, that you will personally take over that responsibility and repay that money. This is an important part of the process to know and to be aware of. And it also brings up the next fact, which is that asking your lender how your credit will be reported. If it's in your business's name, maybe you've signed for it as a personal guarantee. Is this lender going to be reporting this credit product, borrowing and repayment, under personal or consumer credit or as business commercial credit? The best way to know this is to ask the lender that you're working with. So, why business credit? We've defined, hopefully, what it is. Why does it matter? In addition to helping keep your business and your personal finances separate, establishing business credit can also help your business access financing, products, and services based on its own history of payment and financial activities rather than your own. Business credit can help your business have multiple options for credit programs and products from different lenders, purchase equipment or inventory, hire staff, or provide a marketing budget. It can help you rent office space, storage, or vehicles, and qualify for other opportunities like government contracts or attract future investments. It can help you respond to slow business seasons or unexpected shocks like recessions or natural disasters. And it can help you establish interest and insurance rates based on the business's credit and financial activities rather than your own personal credit. One question that comes up a lot as well is, can I build credit if I don't have a social security number? And the answer is, if you have an ITIN or individual tax identification number, yes, you can still build credit. It is harder. There are less options available, but it is possible. And so this would be something where you would build personal credit using your ITIN. And then once your business is established and once it has its own identification number, then when you're applying for business credit and it's in the name of the business, then that's the identifying information that you would use for the business, is the business identification or EIN number. So we talked a little bit about how at the beginning of business's journey, that personal credit is going to be looked at by lenders. So why business credit? Credit is one of those things that takes time to establish. And so the business credit you get at this time, or the products your business might qualify at the beginning, might not be what will ultimately serve its, might not be the same as your final goal with business borrowing. Starting the process now, building that history of borrowing and repayment so that it's documented in the name of your business or in your personal name if you're still working on your personal credit is really a foundation step. It helps you take the next steps so that when you want to get those higher dollar loans, those credit cards with better interest rates or higher credit limits, that you have that history, or that your business has that history of showing it can borrow and repay money in a way that lenders will look more favorably on and will more likely to say yes the next time you're asking to borrow money for your business.
So now we're going to jump into some knowledge checks. Between the reading of the question and me giving the answer, I highly encourage you to pause, take a minute, think about what your answer is, see if you can come up with it on your own, and then go ahead and hit play on the video once you're ready to hear the answer revealed.
What is the most important reason to consider business credit? Is it A, to show others that you're a real business? B, to make sure that your business has the resources it needs to meet its goals? Or C, to improve your personal credit? The answer is B, to make sure your business has the resources it needs to meet its goals. Every entrepreneur has goals for their business, and business credit is a tool that can help you and your business reach those goals. As another knowledge check, a reminder that your business accounts, business credit activity can impact both your personal and business credit journey, especially as your business is starting out. Even though the goal is to separate your business and personal credit, they're still closely linked, especially as your business starts out. You might be funding your business out of pocket or through personal funds. You might be co-signing or agreeing to personally back your business accounts, those personal guarantees we talked about, and your personal credit score is being looked at as lenders are evaluating whether or not to approve credit applications. So making sure that you are prioritizing and both your personal credit and your business credit as you're in this credit building journey will both help you and your business over the long run. I asked the question before, why business credit? And business credit shows in more ways than just establishing and increasing a credit score. You might be able to access or choose from better credit products, lower rates with better terms. You might be able to refinance an existing product and get a better rate. Your credit building efforts can also help you manage the needs of your business during slow times. And it can also help you stay stable as your business grows. Might also be able to help you save money in the short and long term. So, when you're thinking about it yourself, how will business credit help me achieve my goals and the goals that I have for the business?
We covered a lot of information today, and business finance is a really big topic, and running your business is a really big job. So I also want to share some additional resources. The FDIC Money Smart for Small Business materials might be beneficial if you more generally want to learn about different topics related to small business development and banking. You might also be interested in seeking out mentorship via SCORE's network of retired entrepreneurs and business leaders. And local and regional small business development centers can also be good resources for additional business advice and counseling. I've included the Oregon Small Business Development Center link on this slide. Other resources that might be helpful include the U.S. Small Business Administration. This is listed as the website for the Portland District. The Portland District, in this case, actually covers most of Oregon State, particularly the western side. And then the Oregon Office of Small Business Assistance and the Portland Small Business Hub.
Thanks for watching this video about business credit basics and why business credit might be something to think about. We have several other videos on the topic of business credit, and we hope to see you there too. Thanks. Bye.